Welcome back. Canada's economy faces some big challenges. Here's a look at the scope of the problem by the numbers. Investment in machinery and equipment in Canada fell to its lowest level on record in second quarter and has diverged wildly from the rate of investment in the U.S. That translates into a sharp drop in the manufacturing sector. Since 2005, factory output is down more than 10%. Meanwhile, U.S. output was up 30%. At least part of the problem, according to National Bank, is the thicket of regulations Canadian businesses suffer. A total of 320,000 federal regs by 2021. That's an increase of 86,703 from 2006. That environment has put Canada outside the top 20 globally for industrial performance. We used to be top 5. Ottawa's plan to spend 3.5% to 5% of GDP on defense might help the situation if that spending is directed to domestic players. Along with removing excess regulations, the tax environment and access to capital are factors that might make Canada more attractive to business. Stéfane Marion is chief economist of National Bank of Canada. He put together those terrific graphics, which do paint a pretty stark picture. Stéfane, thanks for being with us.
Thanks for having me.
So we know business investment is down, but to see it drop off a cliff like that and diverge from the U.S., in a nutshell, what's going on for business in Canada?
Oh, well, lack of business investment, but more particularly, Amanda, it's the fact that, we're facing an industrial implosion here because our manufacturing is shrinking like no other country in the G7 is. So clearly we have to do something to bring our industrial base back to a critical mass in order to benefit from all these plans that the government is trying to put forward in order to improve our productivity and growth outlook.
So when we hear the federal government say, build, baby, build, some people hear pipelines or mines. We should build production here. We should be building manufacturing plants, things that do finished products in this country.
Yeah, so 2/3 of what we export to the Americans really are on, raw resources. So we need to rebuild our industrial base to transform the resources, and that will allow us to find other markets. But in order to do so, Amanda, you need to present the conditions for businesses to come to Canada, and that means reduce regulations, allow better visibility on how we use energy in this country. If we do all of this, then I can only be more optimistic. But the good news is I think Ottawa has seen the light, and they are trying to reposition the economic policies for this country.
And hopefully businesses follow suit. Of course, the overlay on all of this is a change with our largest trading partner, which makes it harder, right, for businesses to feel confident about their projections. What do you think a government or set of policies could do to try to offset that?
Again, made in Canada solutions, Amanda. There's more than 300,000 regulations overseen by the federal government. You have to slash into that. If we want to rebuild our industrial base, like Mr. Carney hopes that we can do that, then you cannot do it without having a clear taxonomy on how we use natural gas in this country. Think about it, Amanda. The price of natural gas in Canada was trading negatively last week, whereas the U.S. is at $3 a BTU. So clearly we have a comparative advantage that we're not taking advantage of. So this change in taxonomy would say, well, if you come to Canada to set up shop to produce, transform resources, we have a clear competitive advantage, but it's just the extra regulation or uncertainty about, the taxonomy on natural gas, which should be a transition fuel. I think all of these things are paramount in order to even renegotiate with USMCA and provide more visibility to our corporations.
So we may be leaning towards some of those things. Only about 30 seconds here, Stéfane, but in an upcoming budget, do you hope to see spending that will be directed at getting things built here, getting that manufacturing base reclaimed?
Well, there's some of that with Bill C-5, but I still think that the inexpensive way to do so, to go that way, is to unleash private capital to come to invest in Canada. And that means the regulatory environment and clearly the taxonomy on natural gas is critical to rebuild the industrial base.
Stéfane, so good to have you for this. Appreciate your time.
Thanks for having me.
Stéfane Marion is chief economist at National Bank of Canada. Recently, Canada's interim parliamentary budget officer used some pretty strong language to describe the government's fiscal picture. Was it overblown? Kevin Page is founder and CEO of the Institute of Fiscal Studies and Democracy, and also, of course, the first former parliamentary budget officer. Kevin, thanks for being with us.
Good to be with you, Amanda.
So I did want to start with the characterization that you heard. Obviously, the fiscal situation is it's not great, and it's gotten worse. Was the language strong in your view?
Well, I think that the language of the parliamentary budget officer was definitely strong. It was inflammatory. I think he'll probably walk it back in the next day or two. And I think you're right. I think our fiscal picture is tighter with respect to higher deficits. But we'll wait and see in the government's response in the budget in a month's time.
You know, obviously, this is an extraordinary time, but it follows a series of extraordinary times. And one thing we didn't really do was get back to kind of a life of balance, so-called, let alone surplus. Have we lost the taste for it in this country? Have we lost the kind of impetus to ask our politicians to budget that way?
Well, I think it's unfortunate. Like, we have lost a lot of fiscal room since the work that was done by Prime Minister Kerry Chan and Finance Minister Paul Martin. We used a lot of that fiscal room in 2008 for the financial crisis. And then in 2020, with respect to the COVID fiscal supports, Canada unwound its fiscal support significantly. We got back to a deficit of about $40 billion. But now, again, we find ourselves in this trade conflict and the need to spend more on national security. So a lot of upward pressure on the deficit.
There is a suggestion, and I don't know how it's going to play out. You have maybe more insight, but Mark Carney had suggested that there might be a different way to show the accounting of the government, and that investments, sort of capital expenditures, would be accounted for differently than the day-to-day operations. Are you in favor of that kind of thinking? Long-term investments backed by debt, short-term spending backed by taxes?
Yes, Amanda, I'm in favor of it. It's something we've seen in other countries. Certainly in the UK, Singapore, a few other countries. I think Norway does it as well, some of our provinces. The idea of deficit financing current spending on social programs, I think should be a non-starter when the economy is doing fine. So yeah, I think it's a good fiscal target in 4 years, a balanced operating budget. It's a nominal target. It's not deflated by GDP. It will be hard for the government to hit, but it's a good target to hold the government accountable to.
Is it right for the potential for kind of hiding things? So the principle is strong, right? Your operating should be in balance, and then you can fund the way anybody would a long-term expenditure with long-term debt. Could we hide some current expenses over on the wrong side of the ledger?
Well, I think that there's always a risk that we could hide expenditures, contingent liabilities, what have you. I think in this particular case, there's nothing that's going to change with respect to the chart of accounts. The budget's still going to look like the budget. We're still going to have bottom line total budgetary balances, financial requirements, but we are going to see capital in a different way. Mm-hmm. And to me, I think that is important, particularly in these times where we see weak investment. In the business sector, in the public sector as well, in a sense that we need more investment to boost productivity. So I think for me, it's about more transparency. It's not about hiding.
So good to have you, Kevin. Always appreciate your time. Kevin Page is founder and CEO of the Institute of Fiscal Studies and Democracy and a former parliamentary budget officer. Coming up, can Donald Trump shut down film production in Canada? That's still ahead. But first, it was also the U.S. president's musing that affected cannabis stocks this week, but in that case, for the better. Posting on social media, Trump talked up the value of cannabis products for older people. There's already been a suggestion this White House would reclassify marijuana, and that tweet was all the evidence investors needed. Shares of big pot stocks like Canopy Growth and Tilray jumped sharply. It remains to be seen if that high is premature. We're back after this.